A business plan is a series of documents, segments of information, and an outline of a plan of action put down on paper so that a new business entrepreneur can follow. There are many plan templates available in books, on the internet, from various government and small business entities, and each one has a very good outline that one can use. The business entrepreneur should be willing to explore several different templates before beginning the building of a business plan. In the last segment, we discussed expenses, gross profits, sales, and budgets. More importantly, we discussed the need for the business owner to keep track of all sales activities and the associated costs or expenses on a monthly or even weekly basis. It was emphasized that a business owner should use common sense accounting and establish a working model of monies needed in meeting the business expenses. Also mentioned was the fact that professional bookkeeping services helps to ensure the accuracy of the business financial activities and most importantly, assist the owner when excess monies are left over. They do not ensure the business becomes profitable. That is the responsibility of the business owner. In this segment, let's first look at sales or the selling price. What is the amount of money the business owner will sell the product or service? Questions surround, will the price be too much or not enough? How does the price compare with the competitor prices? What might be the suggested retail price? Buyers are always looking for a bargain, but buyers are also more informed than ever before. Buyers shop around and have a relatively good idea of what the item is worth. Price is important, but that is not the only factor in their buying from you. A key to a successful business owner is a knowledge of what the product or service is worth, how it compares to its competitors, and how many buyers are needed each month. The business must sell enough products or services to meet their expenses and to stay in business by keeping their selling prices within reason. Having the lowest prices does not necessarily bring buyers to the business. For the business owner, it means that the number of items sold must continually meet the monthly expenses month after month after month. Successful businesses maintain sales goals on a monthly and sometimes weekly basis. How they arrive at their goals is based on the number of sales it takes to meet all expenses plus additional amounts for profit. If a business has multiple products and varying prices, averages of sale prices need to be established. A shoe store, for an example, with multiple price ranges of different shoes, would average out all of the sales on every customer who purchases during a period of time. Basically, the sales goal would be the number of customers times the average amount spent, which would equal the expenses on a monthly basis. Another example, a computer programmer who charges per hour may have 5 or 6 different customers with different lengths of time per month. Basically, the selling goal would be the number of hours times the rate that the programmer charges, which then equals the expenses on a monthly basis. It would not be based on how many customers that programmer would have. The selling price of the product or service must be reasonable and attainable on a monthly basis, but it is not the price, but the number of times each product or service must be sold each month. Lowering the selling price to get a competitive edge may be good for the business and good for customers, but that business will have to increase the number of sales in the same period to meet their expenses. Another key factor for establishing the selling price is the replacement cost and the related cost of the product sold, or the adequate amount of time needed in providing the service. This is the cost of goods. Replacement of products or the time needed to complete the service is based on many factors, and a very careful, watchful eye should be on all costs associated with replacing the item sold. In service work, discussion in segment 8 will be on time management, which is one of the most important aspects for a business. In our previous segment, segment 6, we discussed more in detail about cost of goods and all of the related costs. With these key points in mind, the selling price must be competitive, must be affordable by the buyers, must be of great quality, it must be perceived as worth the amount of the product, and there must be enough sales in a given time period, such as in a month, to ensure all expenses are paid and an extra amount left over. Net profit is not to be confused with gross profit. Gross profit is calculated as the amount of monies received in selling product and services in a month less the cost of goods. Business expenses are subtracted from the gross profit and not from the sales of a product or service to determine the net profit. The net profit of a business starts with the selling prices of a product or service and how many sales must be made in a month's time to cover all the expenses generated by the business. If the business does not meet the needed sales that meet all of the expenses, and I should point out, accounts receivables are not considered sales until payments are made, another way must be made to pay for those expenses. The formula is simple. Number of sales times the price of each sale equals the total cost of expenses. That is also, in simple terms, a break-even point. Break-even analysis is determining how many sales of items must occur to meet all expenses during that given month. Once all expenses have been paid and there is money left over, these monies then can be considered net profit. However, if there is not enough money to cover all the expenses, then there will be a net loss. Primarily, there are two kinds of accounting methods available to businesses. These include cash and accrual accounting, which determines taxable income. Most small businesses use the cash-based accounting practice, which indicates that money in during a specific time is only counted, regardless of whether the services were performed or the product was paid. Accounts receivable are not classified as cash sales, but money owed to the business and paid on a future basis. Likewise, during a given month, persons that pay on accounts receivables then can be counted as sales. When financial records are kept accurate and on an ongoing basis, decisions can assist business owners with ways to increase profitability, or at least look at ways to increase the bottom line, that being the net profit of a business. Information can be given to business owners to provide discounts, increase target market advertisement, or delete services not making a profit, or increase or decrease inventory. But basically, it stands that keeping accurate financial records helps that business owner with good, logical decisions. This concludes segment 7. Next segment will be on time management. We hope you continue to listen to our different segments on business planning.